Hello, hello.
Hello.
Welcome back.
Glad to be here.
Glad to be back with you. Episode 8.
We're rolling.
Oh, we are so, I'm telling you, so official. We're having like way too much fun, I think. Are you having
I
as much
think
fun as I am?
I'm having a great time, but I think it's supposed to feel fun, right? It's supposed to feel like, at least we want the listeners to feel like we're actually having a good time. So it's a good thing that we are.
Yeah, I know. It's good because we talked about doing this for so long because we thought we would have so much fun. And so it's good to actually be in it and
Yeah.
having fun.
Yeah. That's fantastic.
So
So,
it's awesome. So today we are going to be talking about some commonly overlooked tax deductions because we're all about making sure we can save you and ourselves as much money as possible in taxes. Don't need to pay more than our fair share.
right.
But before we get into that topic today, let's do a quick A-team check-in.
Yeah. You take it away this time, Anne.
I'm happy to go first this time. So my big, I guess, update. I had a great weekend. My one of my stepsons and my partner and I went to Harper's Ferry, West Virginia,
Mhm.
and we went on a hike and it was a beautiful day and Harper's Ferry is just gorgeous, so we had a great time. And we found this amazing bakery. It's called Boulevard Bakery. If any of you find yourselves near Harper's Ferry, West Virginia, and I eat a plant-based diet, so it's always hard to find, food, restaurants,
Mhm.
that kind of thing. But this particular bakery had a ton of vegan deliciousness. And so we stopped by and grabbed some things to bring home with us, which was always fun. So that's all good. But I have to tell you, one of the things I'm struggling with this week is I feel a little bit of deja vu in
Mm.
that this week we are dealing with the GameStop saga coming back again.
Mhm.
And then yesterday, I read an article about zero down payment mortgages. And I'm like,
Oh.
did we not learn our
Have we
lessons?
not
What
learned
is
the
going
lessons?
on? I'm like, I can't even believe this stuff. Like GameStop's back in the headlines and zero down payment mortgages. What are we
Yeah.
doing, people? So I'm having a little moment with that.
Yeah, I tell people all the time in this industry, I still have a little PTSD. Even if I hear CMO or mortgage-backed security, or now with interest rates where
Yes.
they are, now the variable rate mortgage is back in vogue, and I'm just like, oh, guys, please, please, you're giving me night
Yeah.
terrors.
Yeah, everybody needs to hop on Netflix and just watch some of those documentaries about the
Yes.
financial crisis and how everything, came unwound. Let's just remind ourselves it was a long time ago about how bad of a decision these things are. So that's my update. I'm just like, oh my gosh, I can't believe we're
Yeah,
here again. And let's just make sure we're guiding clients to make smart decisions and good long-term decisions and reminding people of the ways that things can go bad sometimes.
absolutely. No, that's a great point. Yeah. Deja vu supposed to be a good sign sometimes though, right? So I don't know, maybe this time will be different. We'll see.
We'll see. TBD.
TBD.
So, how are you, Atrisa? What's new?
I'm doing well. I feel like every week I'm always talking about golf, but it's become my new personality. So it's, and of
You're a
course we're
golfer.
right, we're right in the heart of the season too. So it's really what I've been doing in my free time. But yesterday was National Women's Golf Day. So
Hmm.
the golf group that I'm a member of, shout out to Queens on the Green, hosted a golf for
Yay.
business networking event. And it's basically promoting golf with women and why historically so much business has been done on the golf course. So we had the first part of it was we were just seated indoors. We hadn't gone out to the driving range yet. And we were just talking about how much you learn about people through the way they play, how do they handle
Mm,
frustration, and do they cheat, right? Will they miscount strokes or move the ball or move the marker? And how it's such a great tool to sort of assess how people behave in situations on the golf course, which I thought was so enlightening and eye opening, because I played with some of those people where I'm like, they're throwing the club when they get it bad, or so it was a really interesting day to just
that's
network.
fascinating.
Yeah, it was an interesting day to just kind of focus in on like etiquette about golf and understanding personalities through golf, but a nice time to also network with other female professionals here in the DC metro area on the golf course. It was scorching hot though. I mean, like
Yeah.
it was probably near 90 at one point, so it was a really hot day to be out there, but it was a great time. So, yeah, that's my newest update in my golf adventures.
All right, tell us about your fit because I know you brought it.
So yesterday I tried
What'd you
to keep
wear?
it I tried to keep it what I call golf business casual. So instead of doing,
Okay.
like a skirt that I would normally do on a hot day, I did a thin pair of like navy crop golf pants, but I did wear a white collared like racerback tank. And then I wore
Ooh, okay.
my Blue Spring Wealth Partners golf cap that we were given, because it's
Shout out to Blue
white, and
Spring.
shout out to Blue Spring because it's white and it's perfect for a hot day on the course. And then of course my cute white Nike golf shoes. I was adorable.
I mean, duh. There's no doubt. That's why I wanted to know. I'm like, ooh, what'd you wear?
Listen, my game isn't great,
Awesome.
but
Well,
if
I'm
you ever
so,
see me on the course, you would think I was LPGA. Just know that.
yep. Yep. You're intimidating people with your fit. I love it. That's awesome. Love it. Love that you're an official golfer.
Yeah, I'm having a good time. It's expensive, but I'm having fun.
Speaking of expensive, let's talk about how we can save people some money, huh?
Let's do it. Let's do it.
Th- Yeah, every year I feel like I read articles about how much money people leave on the table because they don't take the proper deductions or they just don't
Hmm.
know that these deductions are possible. And honestly, I think one of the biggest pieces of advice we can give people before we even get into specific deductions is the more organized we are, the more likely we are to make sure we're maximizing all the deductions that we qualify for. I find that so many people get to tax time and it's like a struggle, right? They're procrastinating, they're,
Hmm.
waiting. And then once they get to filing their tax return, it's like a scramble to get all their documentation together. Whereas if we can just be organized throughout the year, whether it's a paper folder where we stick all of our tax stuff or it's an electronic folder, I think that makes such a difference is just being organized.
Yeah, absolutely. I have learned that personally, only because traditionally I have always done my own taxes because they weren't super complicated. But then when I started renting a property in a different state, I started actually working with a tax professional who opened my eyes to all of the deductions I had been missing. So then it was like, okay, now you got to pay more attention throughout the year as opposed to just, on March 15th when you actually start thinking about the tax filing deadline. So I had to learn that myself personally. And I think it's such good advice. If you just keep the tax idea in the back of your mind throughout the year and save receipts, and even if it's just a save as to a desktop on a computer when you make purchases or those kinds of things, keep a little tax folder. That's what I've learned to do. And as I do things like pay the property taxes on my rental property, I just drop the receipt right into that folder so that when I get to April, at least it's all in one place. And it makes it easier to not miss things and you're not scrambling.
Exactly. Yeah. I think it does take that learning the hard way, right? Missing something or it just being a very stressful process for you to be like, all right, this is not working. I need to do something differently here. So why don't we start off with the first deduction that we see people miss,
Hmm.
and that is charitable contributions. I think probably people are keeping track of their cash contributions, but there are so many other sorts of charitable contributions that we can deduct, whether it's property that we donated. Obviously, cash that you donate to a qualified charity for sure can be on the list. But if you donate property, or a lot of our clients will have low basis stock. So they've had
Mm-hmm.
this stock in their portfolio for a really long time and it's appreciated quite a bit, and they can actually donate that stock instead of donating cash, donate part of that stock to a charitable organization or a donor advised fund. So that obviously counts as a deduction. But also out of pocket expenses related to volunteer work and miles driven while you're doing volunteer work can be deducted. One thing you want to be careful about is there are different mileage numbers depending upon the kind of tax activity we're talking about. So for 2024, the IRS mileage rate for charitable activity is 14 cents per mile. That's going to be lower than your typical business mileage deduction. But the other thing I wanted to mention is, I don't know about you, Atrisa, but more and more of my contributions are, my friends will be raising money on Facebook for their birthdays. And so I'll make a donation online. So remember, if you're making a donation online or through some sort of social media platform, that may be one that could slip through the cracks. So to your
Right.
point, make a copy of that receipt and stick that in your tax folder.
Yeah, no, that's definitely good practice. And even when you're signing up for charity 5K runs or 10K runs, a lot of the race fees that you pay, at least a portion of them can be deductible as charitable gifts. So again, just save the receipt and then have your tax preparer review it later to see how much of it you actually can deduct. Just make a note to hold on to it for review at a later time.
Yeah, that's a great point. Even if you're not sure, stick it in that tax folder and then you can
Hmm.
have your tax professional like yay or nay it.
Right.
So while we're on the charitable conversation, Atrisa, let's talk about qualified charitable distributions because these are something that we do a lot with clients in our firm. So walk us through what that is and why people may want to consider them.
Yeah, absolutely. So, a qualified charitable distribution is a gift you make to a qualified charity, but you make that donation from industry term, we call them qualified assets. But essentially, what they are just retirement assets or money that you have been saving that's tax deferred and you have not yet paid ordinary income taxes on it. It becomes a really useful strategy to gift for retirement assets for a variety of reasons. But one, the biggest one typically, is that you're able to offset the tax impact through the deduction. So, of course, you take money out of, let's say, your IRA, your traditional IRA. It's going to be taxed as 100% ordinary income to you in that tax year. By gifting that distribution to a qualified charity, you're able to make the deduction, which offsets the income taxes you would have paid. This is typically the most beneficial to clients who have reached their required minimum distribution or required begin date for minimum distributions from their retirement accounts, and they don't need the money necessarily for their living expenses. So the IRS is requiring that they take a certain dollar amount out of their IRA every year. They don't need it, and they were going to make a gift anyway. It makes sense to offset the tax impact by making that gift directly from that traditional IRA to the qualified charity. We have lots of clients who do it. It's worked out wonderfully. We're able to assist, and it's a very easy process typically because we make the distribution directly from the account and sent directly to the charitable organization. So for most of our clients, they never even have to interfere with the process other than signing the distribution request. But it can be a really beneficial tool, especially if you need to take or if you're required to take a distribution and you don't need the money.
Yeah, the other no-brainer where we see with clients is if you're taking, excuse me, the standard deduction and you're making charitable gifts, just writing a check or paying cash or whatever through your cash flow, and you are required to take distributions, this is a no-brainer because
Mm-hmm.
instead of making the gift to the charity from your checkbook, now take the QCD directly out of your IRA because you're not getting a tax benefit from writing the check because you're taking
Right.
the standard deduction, you're not itemizing. So this way you take it out of the IRA, it's a tax-free distribution and you're satisfying your RMD. So if you find yourself in that position, definitely look into QCDs because you could continue to be charitable and gift and get a tax benefit, which is nice.
Yeah. It's a great tool in planning.
Yeah. So next, let's talk about medical and dental expenses. Now, there is a hurdle here. So in order to deduct any sort of medical or dental expenses, they do have to be at least 7.5% of your adjusted gross income. So you can't just deduct every medical expense. This is going to occur in those years where you find yourself with a lot of medical expenses. But any medical expenses that are above that 7.5% of your AGI that have not otherwise been reimbursed by insurance, you can deduct. Also, if you have had medical expenses for your spouse or a dependent like a child, those can be deducted as well. And then, just like we were talking about with charity, you can also look into deducting medical transportation costs. So, getting yourself to the
Hmm.
doctor or dentist, picking up medicine, if there are tolls involved or parking involved, those can qualify. So those can really all add up, especially in a year where you find yourself with a lot of medical expenses. Now, the medical mileage rate for 2024 that IRS gives us is 21 cents. So it's higher than that charity rate, 21 cents per mile.
Yeah. It's really helpful. And we see some clients this way, especially in retirement where they may be paying more of their medical expenses out of their pockets. But again, it goes back to your point about being organized. It's one of those things you want to make sure that you're paying attention to in the moment. So, for example, deducting toll fees, you want to make sure you tuck those receipts into an envelope somewhere, or that you're monitoring, especially with things like mileage, because that can be very difficult to track when you want to go back after it's been, almost 10 months since you actually took the trip. So I think with medical expenses specifically, you want to be extremely organized and detailed with monitoring those expenses so that it's not such a scramble when it's time to actually file the tax return.
Yes, another hat tip for organization. All right, so next let's talk about investment losses, which are never fun, but we get some
No.
tax benefits.
Yeah, it's not why we invest, right? No one ever wants to consider that they would ever take a loss on an investment, obviously, but it does have a tax benefit, and it makes sense to pay attention to when you can harvest some of those losses. So, in a year like 2022, when everything was down, right? Stocks, bonds, everything had a negative performing year. The silver lining to that year that it was an opportunity to do rebalancing in portfolios, to look for places where we could take losses, because those losses also become a deduction for tax purposes. Now, you will have to pay attention to whether or not the loss is considered short term or long term. But typically, if you have net losses in the tax year, you can deduct up to $3,000 of those losses against your income, your actually ordinary income. And if, for example, you have more than that, you have the ability to carry it forward to the next tax year. So even though you harvested more that you could use, let's say in 2022 or 2023, those will always carry forward to be applied against future income in future years. And it's always nice to have harvested losses that you can pull from. So when you have really good performing years like 2023, you don't feel hesitant about recognizing gains because you know you have those losses in your back pocket that can help offset the tax impact.
Yes, and we are seeing that this year. I mean, we actively harvested losses for all the clients we possibly could back in 2022. And then when we rebalanced last year in 2023, and even some of the rebalancing that we've done so far this year, because the market has come up so much, to your point, we have been locking in quite a bit of gains, but we have quite a bit of carry forward losses, not for every client, but for the clients that it made sense for, and for whom we could do this. So the tax offset, maybe it's not 100%, but it is offsetting quite a bit of those gains so far this year. So this is a strategy that really does work, and we're seeing some of those benefits today, but you just got to keep track of them.
Yeah, absolutely. And it's also, I think, a testament to why it makes sense to work with a financial professional in investment management. I know a lot of people are DIYers and like to do it themselves, but a large part of what we do in our investment management strategy is also tax planning. I mean, we've shared it before. We are not CPAs or accountants, but tax planning is a big part of investment management. It's why we want to have copies of our clients' tax returns so that we are constantly monitoring what those losses look like when it's time to make decisions about reallocating and rebalancing portfolios. So sometimes an investment management professional helps provide that extra added benefit when it comes to the tax side of investing.
Since we're giving shout out to Curo Private Wealth on that
Shout out
one.
to Curo Private Wealth.
But it's true. And it's part of our process, right? So if you're
Yeah.
managing your own investment portfolio, when do you tax loss harvest? Does it make sense? What do you get into? If you're getting out of something to lock in a loss, what do you get into? So yes, to your point, we handle all of that for our clients, which I think is great. So next, let's talk about any sort of property losses or expenses. So any casualty losses that you may have experienced in a federally declared disaster area. Again, this is where you want to make sure you're bringing in your professional to kind of check this for you. Those losses can be deducted on your tax return. And especially right now with mortgage rates being so high, if you paid points to get into a mortgage or to refinance a mortgage, I don't know why anyone would really be refinancing right now unless you're
At
in
this
an
point,
ARM and you want to get out of
right.
an ARM. Exactly. And into a fixed rate. I could see folks like that wanting to refinance right now. But if you got a new mortgage and you paid points to buy that rate down, those you want to make sure you're letting your tax professional know, because those could be deductible as well. Again, it goes back to that organization. You
Mm-hmm.
may not mention to your tax professional that you bought a new house. They probably will know because you're probably going to change your address with them. But again, just make sure you are communicating this with your tax professional.
Yeah. And the one caveat to remember, which I think it's been different in the tax law changes over the last several years, is that it has to be in a federally declared disaster. So things, like damage left in the wake of tornadoes or hurricanes that hit large swaths of the country. So you just want to make sure that you're paying attention to that, that it's due to a federally declared disaster in your area.
Right, exactly. All right, so last up for you, we have like a quick hit of kind of random miscellaneous deductions that you may not be aware of. So, Teresa, you want to go through those kind of rapid fire for folks?
Yeah, and I'm actually going to read them from the list. I want to make sure we don't miss them. So, there is student loan interest, which student loans are back in play. They were paused for a while, but they're back in play, and payments started again last year. So pay attention to that. Gambling losses to the extent of winnings for all you people who are on what's the new sports betting site now? You might want to
Like
pay attention to those. Right,
DraftKings.
DraftKings, that's taking everybody's money. Travel expenses for military reservists, and moving expenses for active duty military under a permanent change of station order. So, moving expenses used to be deductible, kind of more wide range. Now that's really limited to those who are military active duty professionals. $300 of unreimbursed classroom expenses for teachers and assistants of grades K through 12. And why I hate to think of the fact that teachers are paying for supplies out of their pocket in school systems. We know now that that is often the case. I mean, even I who have teacher friends, or they always have some website where they're asking people to donate to buy books or things for their classrooms. So up to $300 of unreimbursed expenses can be deducted against your taxes. So that's just a little quick hit of some miscellaneous things that you might not think about very often.
Yes, exactly. So again, we've said it before, we'll say it again. Anytime we're talking about any sort of tax related information, we always, always, always want you to go to your tax professional. This is meant to be general information. It's meant to make you aware of something you may not
Right.
previously have been aware of, to note, to have the conversation with your tax professional, because one thing our tax code is not is easy, straightforward. It's very complicated. It's very cumbersome. So make sure you have that conversation with your professional who is familiar with your situation and can guide you to what applies for you and what does not apply for you.
Right, absolutely. And the other thing I always like to note, in addition to these are just general suggestions to make you review, is to also note that a lot of the deductions we take on our tax returns are based on an honor code. When you file your tax return, you're not submitting these receipts to your tax preparer. You're not attaching them to the e-file when you submit it. But again, it's not a problem until it is. So be organized, keep the receipts. If you're unsure about something, like I mentioned, save it, review it with your tax professional later, because no one wants to be audited. And no one, I think many people don't ever think that they will be until they get that letter. So we want to reinforce that. Stay organized, especially when you're taking lots of deductions that are sort of the overlooked ones. Just make sure you're tracking everything, keeping good records, so that if you should ever, and I never wish it on anyone, find yourself in an audit, that you have everything that you need to be able to support that process.
Such a great reminder.
That's the thing. I don't mind paying my taxes. I just hate the process of filing them. I'm like, come on, IRS, there's got to be a better way to do this. You know how much I owe. Why make this so complicated?
Exactly. Yeah, you know everything about my financial position, so.
Yeah.
Yes. All right. So hopefully that was interesting information. And let's do a little closing thought for folks. So, what do you have on your mind this week for a closing thought, Atrisa?
And it's probably a reminder to me just based on how hot it was when I was out on the golf course yesterday, but summer is upon us. I can't believe that we're already into the first part of June. We're almost halfway through the year, and I felt like New Year's Day was literally a month ago, is how I feel. Like we've really just been in sort of this speed warp. So I really hope that summer is a time when everybody gets to slow down a little. I mean, I know for us here at Curo, we start, of course, ramping up a lot of internal projects, but our schedules lighten up a little bit. You and I get chances to take vacations and go on trips with our families. So just a reminder that if you can this summer, slow down a little bit, because by the time, the children are back in school and fall is upon us, I feel like the second half of the year is just going to go by in a blur. So if you get a chance this summer to do something fun, to just take a deep breath and relax, even if it's some extra pool days or some extra weekend trips to the beach, just do something to just kind of slow things down a little bit and take it all in, because life goes by so quickly. It just really hit me yesterday that, wow, it's summertime already. And it just kind of, I think, snuck up on me. So that's my closing thought. Slow down a little bit and try to enjoy it while we got it.
Love that. Thank you for that important reminder. Yeah. And if the first half of this year flew by, because I felt the same, it flew by, then to your point, once fall hits, it's
Yes.
like Halloween, and then it's Thanksgiving, and then it's the holidays, and then it's New Year's. So it's going to fly by even quicker once we get to
Right.
that second half of the year. So thank you for that reminder.
Of course. So what's your closing thought for us today, Anne?
My closing thought is to be careful about how we verbalize things. And I'm going to
Mm,
give you some specific examples. So, if one of your goals, for example, is to work out more or to just prioritize your health or invest in your health, but then you find yourself saying, I don't have time to
mm.
fill in the blank. I don't have time to work out. I don't have time to cook my own meals. I don't have time to go for a week. What I want you to do this week is change those words around to say, I am not making time to work out. I am not making time to cook. I am not making time to take the walk, because we all have the exact same amount of hours in the day. We are all extremely busy. and we get to choose how we want to spend our time and prioritize our time. And it's much more empowering if we say, I am not making time for this or that, then I don't have time for. So give the power
Right.
back to yourself to make the choices of how you want to spend your time. And if you are trying to prioritize something, and maybe you don't have the time right now, and that's okay. Maybe you're in a crazy season of life and you can't prioritize working out, for example, and that's okay. But say I am not making time for right now, but I will in the future versus I don't have time for. The other thing is, when I was picking my kids up from school the other day, and even that, like, I have to pick my kids up from school. No, I get to pick my kids up from
Right.
school. Like, this is, I know this is fleeting time with them, and I get to pick them up from school. That is a gift and a blessing, and it just completely changes, I think, your mindset of how you go into different situations. So that's my closing thought for the week.
No, that's great. And it's such a friendly reminder because sometimes just the way we phrase things helps to shift the way we internalize them or think about them, just to rephrase it in our lives. So that is a really helpful reminder. And to just speak things from a more positive place or speak it through positivity, I think also helps to reframe sometimes when we're really busy, right? And things feel like they're overwhelming us, to rephrase it. And I think that's so beautiful to say, I get to spend time, right, with my children when I pick them up from school. Just like, I don't have to record this podcast with you, Anne. I get to do it with you. I get the privilege of doing it with you. And
Yes.
it's fun and we have a good time.
Yeah. Yes. How fortunate are we? Agreed. All right. Well, that wraps us for this week. Thank you so much for joining us for another episode of Living Richly with Curo. If you enjoyed this, if it was valuable, interesting, please give us a 5-star rating and review. And if you have any friends, colleagues who have been complaining about taxes, shoot this episode their way. We would really appreciate if you share this with your friends and family members and colleagues. And if you want more of Curo, you can check us out online at curoprivatewealth.com. We've got a blog and lots of interesting information online.
Yeah. And you can also check out Anne and I individually on LinkedIn. We each both also do some weekly short form videos with quick tips and things as well that might be really helpful to you. So connect with us on LinkedIn.
Absolutely. Have an awesome weekend, everyone. We'll catch you here again next week. And thanks again for tuning in.
Yeah, thank you. Have some fun.